So, if you've been keeping an eye on your crypto portfolio lately, you probably saw a whole lot of red. But what you just witnessed wasn't some random, chaotic price crash. No, it was actually a pretty familiar, politically driven pattern playing out, again. And if you want to know how to handle these moments, you've got to understand what's really happening behind the curtain. So let's break it down.
And look, this isn't just my opinion. A market pundit, Levi Rietveld, nailed it when he said, the political theater is starting to come into effect. And that's exactly what this is, theater. It's a recurring cycle where, honestly, a headline from Washington can have a bigger, faster impact on your portfolio than some brilliant tech breakthrough. For us as investors, that completely changes the game.
All right, so let's look at the damage. What actually went down? Well, you had Bitcoin, the big one, the market leader, and it just took a nosedive. We're talking a sharp, fast correction that smashed right through that $88,000 mark. Now, that number was a big deal, a huge psychological level everyone was watching. When it broke that fast, yeah, that sent a message.
And believe me, this wasn't just a Bitcoin problem. Nope, the pain was spread all around. You saw other major coins, like XRP, get hammered just as bad, dropping down to around $1.85. It was a domino effect, right? And it shows just how widespread this whole thing was, hitting basically every corner of the crypto world. But the real question, the one you're probably asking is, why? To get that answer, we got to look past the numbers.
Okay, so this is the heart of it. Why did this happen? I mean, the tech didn't suddenly break, right? So what gives? Well, the answer isn't buried in some blockchain code. It's out there in the world of geopolitics, where just a few words from the right person can unleash a tidal wave of selling.
So here's the spark that lit the fire. Renewed U.S. tariff threats. That's it. This sell-off wasn't triggered by some internal weakness in crypto. It was an external shock. And according to the analysts we're looking at, this talk of tariffs involving the U.S., Canada, and China, well, that's what spooked the market. This isn't a crypto problem. It's a geopolitical risk problem. And you have to understand, for the big players, the massive institutional funds, that kind of uncertainty is like a giant flashing red light telling them to get out.
And it happens like clockwork. Let me walk you through the chain reaction. Step 1, the tariff threats hit the news. Step 2, suddenly, geopolitical risk shoots through the roof. Step 3, the institutions, the big money, they don't wait around. They start dumping their riskiest assets to protect themselves. And guess what's high on that list? Crypto. And then boom, step 4. That massive sell-off from the big guys is what causes the sharp correction that you saw in your own portfolio. It's a direct line.
Okay, so we get it. Institutional selling was the trigger. But you might be wondering, why did my altcoins get crushed when the news was about Bitcoin? Well, there's a really clear reason for this domino effect, and it's something every single crypto investor needs to understand.
The best way to think about it is this. Bitcoin is the market's lead ship. It's the gigantic aircraft carrier in the fleet. Because it's the biggest and the oldest, where it goes, everyone else tends to follow. It charts the course for the entire crypto ocean. So let's break that down. You have Bitcoin, the lead ship. It's the one that takes the first hit from these huge macroeconomic waves, like tariff threats. It sets the market's direction. Then you have the altcoins, right? They're like the convoy of smaller ships following behind. They follow that lead ship, but, and this is absolutely crucial, they often get tossed around even more by the waves. Their movements are amplified. They go up higher in a bull run, but they also fall way harder and faster in a downturn. And that, right there, is exactly why XRP got dragged down with Bitcoin. All right, so we've covered the what and the why. But the big question now, especially after a drop like this, is what does it all mean? What's the takeaway for you as an investor looking at your portfolio? I mean, it's totally natural. You open your app, you see a sea of red, and your stomach just drops. And you start asking that one scary question. Is this it? Is the whole thing broken? Is there some deep structural damage to the crypto market that I'm missing?
Well, according to the pundit's analysis, the answer is a pretty firm no. This isn't a fundamental breakdown. Instead, what we're seeing is a recurring pattern, a very familiar playbook. You get the political threats, the market overreacts and panics, and then, usually, things calm down. It's a cycle of tension and negotiation. We've seen it play out before, and you can bet we are absolutely going to see it play out again. Okay. But, and this is the most important thing I'm going to say, just because this is a familiar pattern does not mean it's safe. Please do not hear that. What this whole event really is a wake-up call. It's a powerful reminder of just how sensitive the crypto market is to shocks from the outside world. Because it's still viewed as a highly speculative asset. It is always one of the first things the big institutions sell when they get nervous. Geopolitical events are going to continue to throw this market around. And in the end, the only person looking out for your portfolio is you. Manage your risk accordingly.